Good evening, ladies and gentlemen. This is Crew SA Trading Frank. It's approximately 10 p.m. Eastern Standard Time. We had some technical difficulties tonight. Unfortunately, because of that, we could not have a full session, webinar session with members attending and the Q&A sessions and such. So I'm going to go ahead and in the next 15 minutes, keep it brief, get straight to the point with a couple of things that are extremely critical to our charts going forward into this coming week and the end of the month. And we shall begin. Full disclosure, this is purely for financial education, not for solicitation or advice. It is approximately 10:01 p.m. on May 6th, 2018. And let me start off by making a couple of broad points that I always make, which are extremely critical and helpful to all members, free trial subscribers, to keep a rounded view on what's happening with the markets and not do stupid things or try to do lesser stupid things than that we all do at times. Some of you retail emotional traders do it a lot more than I do, but due to extreme volatility in the markets, and I mean really extreme volatility in the markets, we all tend to basically do some silly things at times. So, as humans, we're entitled to do so. But as long as we minimize the stupidity of the things that we do, then we should be able to generate substantial profits, as I've clearly shown repeatedly, week by week, and in many cases, day by day. Okay, on my service here at Clueless A Trading. So saying all that, the market is at this point on the short-term momentum is very strong. We saw what happened on Thursday. We saw the flash crash. We saw what happened on Friday with the market opening up, pre-market trying to move higher, then falling 150 points, and then turning around and creating a massive monster short squeeze rally that literally decimated a significant amount of dogmatic shorts who were piling up into the short for a Friday crash after the Thursday rundown. Well, everything was identified, alerted from the Thursday lows, the hammer reversal lows. And without having to repeat myself too much, people need to go ahead and listen to my video from the day before. I clearly laid out the path of the possibility of what was going to go on after we saw that pretty powerful, very powerful hammer reversal off the flash crash, and then the melt up rally on Friday. And what can I say? This forecasting is really of very high caliber, and many of you are participating. Some of you are participating, as far as I can see. Extremely happy to see that, and some of you and many of you who are not participating, I don't know what to say. So, aside from that, a couple of broad points that I'm about to make. Number one, risks are still there in the market. This is a completely, literally 100% machine-driven algorithmic high-frequency trading market, and you can just simply see the nature of that in the form of these candles, which are relaying what these machines are doing. This is not grandpa's market, as I like to keep on repeating. This is not a market that goes up in a straight line or a market that falls in a straight line. Even during times of large downdrafts, the market does not move in a straight line down, but instead does a lot of back and filling, but the overall candles remain red, and those would be those big fallouts that last a couple of days in a row. Okay, these are the small ones that last 1, 2, 3, 4, and then the big one, 5, the hammer reversal, 3 days up, 4 days down, that type of stuff. This is the nature of the new normal. This is what the markets are going to be doing forever. Sometimes lesser, sometimes more. End of story. Second risk in the market is obviously the policy risk coming out of Washington, D.C. Trump tweets are a major risk to the markets. Good or bad, they tend to shock the markets for the time, for a short moment, and then the market finds its footing. So we always have to be careful about that. We wake up in the morning and we see a tweet coming out at 6 in the morning from the White House, and believe me, all things can go wrong or go right, but most of the times it goes wrong because many times the tweets are extremely, what's the word I'm looking for, extreme. In many cases they're quite stupid. They're emotional tweets coming out early in the morning, and the markets get shaken up. Anyway, we have to deal with it. That's the way it is. So the second risk is obviously the constant risk that we see from Iran. That we're going to pull out of the Iran deal. I'm not going to get into a political narrative on that stuff. I've mentioned a couple of things on that, my thought process on that on the previous video. Feel free to listen to it. But the Iran deal is May 12th. Whatever President Trump decides is going to be a full-scale pullout. Might have some very negative consequences short term, but I think that the Trump team will do the right thing. I'll leave it at that. The third risk is obviously the North Korean risk, even though we're kind of being chummy with the fat man in North Korea, Kim Jong Un. Um, Believe me, this bromance can it can at any given time have a little bit of a friendly fight, and that might shock the markets too, just the way it is. Economic risks are always there. If we get a very strong inflation number in the form of a PPI, CPI, price, what do you call it? PCE deflator being higher, job, so that type of stuff, that's also a risk to the market. Friday was it was a moderate job number with lower wage growth, wage inflation, and it was really a perfect number the markets were looking for, where there wasn't overheated wage growth. The inflation numbers were moderate. Within the wage inflation was moderate, the job number was moderate, and the markets initially didn't know what it was doing. Of course, the markets always know what it's doing. That's why it fell 150 points and then turned around and went nuts. Now, the reason for the movement up on the market too on Friday, this type of monster candle you don't see too often. In fact, you see very, very seldom, and it generally has a follow through. Is because of Warren Buffett too. Buffett buying 75 million shares or something of Apple last quarter, looking to buy more. Positive comments coming out of him. Sparked off a monster rally on the Apple side, which is a major component of the market. So all kinds of stuff, kind of brewed together. It was a ferocious rally, and now I'm going to get and coming into this coming week, I follow technicals. The rest of it is noise. There are earnings coming out. Disney's coming out. That's going to affect the market somewhat, but well, earnings have been good overall, so I'm not too worried about the earnings part. So I'm going to stick to my technicals, which has been working terrific. We're doing extremely well on. Want to see some good, powerful performance ROI numbers? Go to the Twitter feed. ROI numbers are right there for you to see. I don't want to sit here and say 2, 3, 400, 500%, which has been the case in many of the trades. So saying all that, let's take a look at technicals, because that's really what drives the market. So this was your candle. Look at each of these patterns exactly. We almost got close to going break even for 2018. That's the magenta line here. We almost went there. We fell back a little bit. It's still a very, very bullish candle. It's a bullish engulfing candle that engulfed 1, 2, 3 days, almost 4 days of declines. And this is where we are now. Where do I think it's going? Well, it's right staring in front of you. That's not my thinking. That's just a technical narrative of what I think the markets are going to do. Right there. We're gonna at least hit the break-even level for 2018. We have strong momentum in our back. There was nothing really negative about on the new weekend headline, so that's a good thing. So at this point, the break even is 267.30. This is the spies that we're looking at, and then of course this gap fill here, which has always been formidable resistance, and that's around the 268.89, 2700 level. Also happens to be the downtrend line. It's very clear as day for anyone to see. I have powerful inflection arrows in place where the market should be bought or sold, where the resistance is going to come in. All you got to do, like I said, even a kid can read this chart, guys. All right. I'm going to stick with that. So saying all that, not much to explain here. We have a little bit of room to move. This is quite a bit of room. If you're an active trader, this should give you at least 100 to 200% on your SPY SPX calls. Nothing more to say about this chart. Okay. Everything else is laid out. Now, if somebody wants guarantees on whether the market's going to go there or not, they're not going to find it here. The bottom line is we're looking at high probability moves of what might happen. In the meantime, we might open down, create, pull back a little bit, just the way it always does. Even on the way up, it's not like it went up every single day. So let's look to see here where we had a powerful rally back in March. Okay, so yeah, it went up like that. That's a similar type of candle like this, but much smaller. Guess what? The next morning it opened down, and then it went up. Next morning it opened down, then it went up. The following morning it went down, then it went up. Same thing happened again. So That's standard procedure. So just because the market pulls back on a back and fill reset, a 15-minute reset, 1 hour reset, and all those technical things that I keep on showing, you don't need to freak out. Okay? If you need to freak out, I'll tell you to freak out. All right, how about that? In the meantime, stochastics are trending higher. This is telling us that we do want to get overbought, and by that time, we should be somewhere in that zone, and that should be a substantial amount of money. That's pretty much it. Now, on this one chart, I do have to mention one thing. If everyone's waiting for that perfect moment where the markets are just going to every day climb higher, they're not going to get it. However, from a technical standpoint, this big fat red line here and this one, these are two major downtrend lines. We took it out with full force with a breadth thrust, a very large bullish engulfing candle. That is very positive, whichever way you slice it or dice it. So if you are not positioned here, if you are not positioned here, if you're not positioned here, you did nothing. If you got positioned all the way here, for the day, you ended down in the red, which is fine. But the fact that you sat around, or many of you sat around and did nothing at these levels, especially when I keep on publishing on my real-time Twitter feed how powerful this candle is, and that it should be bought. Many of you still don't listen. I have nothing to say. Punish yourself. This type of reversal candle of that type of tail, magnitude tail, 400-point type of reversal. Yeah, almost 400 points, right? On Thursday. 400 down, bang! 150 down, huge. What more can anyone do? You just gotta act on it. All right? You don't need to be an active day trader. You can swing it. Lots of winners, guys. Okay. All right. So is what I was getting at, this big downtrend line broken with a huge breadth thrust, massively bullish candle over the 20 SMA EMA crossover. High probability that on its way, zigzagging its way up, some resistance here, we are going to get to this 270 type of level. Now, if we do break this big fat downtrend line, there is inevitably going to be another massive momentum move that should replicate this very large falling candles, because there is a physical law of nature. Every reaction has equal and opposite. Every action has equal and opposite reaction, right? So if pattern symmetry dictates, and if we do break out with a big thrust off this very large downtrend line, somewhere around the 272 level on the SPY, which is quite a bit away in a high from here, higher from here, then we should be able to get towards the 282 level. Now, I am not going to go that far because that's a pretty dramatic, optimistic scenario, and I do not want to be too optimistic in this type of market. I don't. Now, saying all that, every time I'm not over optimistic, the market does exactly what I say it's going to do. Technical, predictive, precision, tactical analysis delivered by Clueless 8 Trading. So there's really not much to say, because this pattern, one way or the other, if things cooperate, okay, we're going to get a huge green wall here. This is a major resistance. We could very well fall back into this zone. And then attempt another breakout, which is probably what's going to happen. We're going to hit this level here. We're going to have this dramatic 200, 300, 400 point type of sell-off. Everyone's going to freak out again. We're going to be buying. We're going to be shorting this move down, just the way we shorted these type of days very successfully. And let's say it pulls back down here, heaves up, and all this is going to happen within 24 hours, within 6 to 7 hours intraday. So if you're sitting there and, kind of doing hallelujah, and then, hiding in your bunkers, kind of peeking, looking for that, oh, is it all clear? Can I come out? Well, you're never going to get that perfect moment. The perfect moments are these type of massive hammer reversals with large tails. Those are the perfect moments, honestly speaking. Okay? So I know some of you took advantage of that, and congratulations and God bless you. That's called trading. It's not rocket science. It's called real trading. So anyway, so if this happens and then we break out of this downtrend line, whether it's going to be a breakout directly from here or a pullback doesn't have to be at the lower end of the channel, which is again retesting the 200-day moving average, which we have retested now many times. That's your 200-day moving average here, right there, this zone here. um, if it doesn't have to be a full scale, get up here and then crash or again to the 200-day moving average, because every time the 200-day moving average is hitting, I am quite surprised to see that it's not breaking down, to be honest with you, because we have hit it many times now. All right, so let's say it hits here and pushes up again. Maybe this time it picks up the thrust that it needs to break out of this massive downtrend line over the 271 area on the spice, which is, I'll show you in the SPX, and you should have already seen it by now because I posted those charts multiple times. Then you are going to get that move up towards that level. But that's asking for quite a bit. That will require some very powerful moves on the market, but it can happen. And once we hit these levels, if we do, then you can expect some big selling. So first big selling point will be around here. Second big selling point will be around here. In the interim, you got to play the momentum. And you got to buy my alerts, even if it's small amounts. Well, small amounts, big amounts, that's your business, not mine. So taking a look at, so this is where we are right now, all right? So you got to track this chart like your ultimate GPS radar. Not just track it, act on it, and act on the alerts. So looking at the SPX here, this is your actual SPX. Actual SPX, not the SPYs. You can clearly see here it's the same story. We are massive resistance at the 2700 level, which also happens to be what this big downtrend line is. Okay, so if it breaks out over that, you can rest assured we're going to hit to 2750. This is very clear cut and dry. That's a gap. That's a gap. This gap got filled once, so pure technical analysis says once a gap is filled, you can't fill it again. Well, I kind of take leeway and say, all right, it can get filled again. That's why I have the green line here. Whichever the case, this is extremely important. First of all, we got to go break even for the year. That's why I said the short-term price target, which is a very decent sum of money from where we originally bought our calls and scaled out and then bought more higher calls, the 2680. 2681. At 2681, believe it or not, we simply go break even for the year. I think that's very doable. And that's another 120,000 points from these levels. Futures are up about 7. I have a feeling we go to 2680. We get to 2680 by tomorrow, the day after. That's my opinion. But once we hit, that's just the break-even level. But the real level of major resistance comes in here. And at that point, it might do what I just explained to you on the SPY, which is big pullback. And then, of course, we have the big 200-day resistance level being tested here, support levels being tested here at the 2600, 2614 level. Do we have to go back and retest that? I have no idea. But anything can happen in this type of highly, extremely powerful, volatile markets. Okay? So it could come down here and then attempt to move higher. And if we break that, we know what we're going to do. We're going to test the 2560 level. It's all in my charts. Okay? So at this point, we got to at least go break even, go over this intermediate downtrend line, this red line here. And this is all money in your pocket. You're talking anywhere from 60 to 150 to 200 plus 300%. 300% on the maximum level if we get to this 2700 level. So if you think that making 300% even on a small amount of money is not worth your time and effort, and you make a whole bunch of, good old excuses, oh, I'm too busy, I can't watch this and that, well, I think it's very stupid, because you can buy a little bit and say, okay, buy the 2700s, leave it in there. And if the charts are cooperating, I'm always alerting on a real-time basis, then you just leave it in there. You don't have to watch the screen. And that's true in my service all the time. You don't always have to watch the screen. As long as you look at the charts like, 2 or 3 times a day, and if they're still cooperating, I'm still saying uptrend intact. I'm not saying that, and I'm God, I don't have a guarantee it's going to go there. But at the same time, it's a high probability when I say the uptrend is intact, because 90% or 80% of the time, the uptrend is intact. And the uptrend we're talking about is not some massive uptrend where we take the old highs out. I'm talking an uptrend simply to the 2700 level. So far, this is looking good. Stochastics are moving higher. and we have multiple retests of this. The economic environment is solid. Earnings are solid. There has been, overall overseas tensions are somewhat dying down. The China trade risk is still there in a big way, even though it's kind of calmed down a little bit. We haven't really heard much, but China has not made a big deal on it. They've actually said some positive comments on it, but that's it. So these are the levels we're watching. Okay. Once it hits here, you're going to see some nice selling, and that selling will probably be 200 to 300 points. Then we pull back up. If things are still moving on, we're going to keep on watching this full stochastics get overbought. Once we get here, once it gets overbought, it wants to reset. That reset is basically the move down by about maybe 150 to 200 points. And then if the uptrend is continuing, then we are going to hit the 2750 level. 2750, 2750, gonna get some selling here. So um, at that point, then we have this big gap to fill at 2800. I've already explained that. That's asking a little bit too much. But looking at the whole big picture here over a multi-week basis, this is where the pattern is. This is where the pattern completion happens. The big pattern completion is all the way up here, but that's asking a little bit too much if you ask me. But what the heck do I know? Markets can be a heck of a lot more bullish than what I think want to be. But I take one step at a time, and we like to see the reactions of these markets at these exact levels. And what the reaction is what determines how much money or the probability of making money to the next stage. We don't sit here and crystallize the situation. We give our opinions, but we also like to see the reactions at these extremely powerful inflection levels, gap, downtrend line, where the market sold off last time, back around the 20th of April. So, these are important inflection points. So you got to play these reflex bounces for large amounts of money. I repeat again, if you're waiting for straight lines ups and straight line downs, you know very well, I don't need to remind you, it's a tragic, pathetic story. SOA, sitting in bunkers, changing diapers on your own in some dark bunker, and being scared all the time are not effective trading strategies. Don't walk the walk of shame all the time, all right? Make your families proud. All right. Um, that's basically it on this one. Uh, Looking at this chart here, this is the ultimate chart that I have published over weeks and weeks, if not months and months, repeatedly tweaking it, updating it. This is your hourly chart. This is the one that active traders or even non-active swing traders can follow. This is what happened on Friday. This is what happened on Thursday. Big flash crash, big turnaround. I said, this is huge, guys. This is big. This is what, when you zoom in on the 1 hour, this is what you see. When you zoom out, you see that hammer reversal, right? So people are a little bit slow in visualization. Let me show you again. This hammer reversal, which I said was monumental. Listen to my previous video. Listen to read my intraday trade alerts and tweets on that when it was happening, and we caught it. This hammer reversals, when you zoom in, this is what it looks like. This is where we are. Futures are up 7. Looks very likely from a technical perspective that we're going to hit this level here between 2680 to 2688, which is where the big sudden waterfall decline came and wiped out very large number of tactical profits. Okay, so this pattern gets completed. From this point, it has to be a sell. It has to be in order for the markets to go higher. Let's say the markets want to go to 2718 or so that I showed. The market has to pull back, because if it just simply goes like that, which is all fine and good, I'll take that too, but that is unlikely. The market has to pull back once it hits that 2688 level or so. Standard procedure, from there the market can go. Otherwise, if there's animal spirits back in the market, big positive developments across the board, some sort of preliminary China trade tariff negotiation that is positive, yes, the markets will break out on nonstop straight towards 2700. Otherwise, it's going to hit that level clearly shown here. This is not rocket science, guys. I repeat, clearly shown here where you're going to pull back. Does it have to be another massive flash crash? No, not necessarily. Is it a possibility? Absolutely. But my thing is I'm looking at is this is where we're going to go. So I'm going to play that. Even if we pull back here, retest this big broken breakout of the downtrend line that I call to the teeth, I will be a buyer here. Unless things break down below these levels, the market uptrend is intact. That's it. Final chart that I'm going to show is your SPX. This is very clear to see what's going on here. We have a large triangle formation, right? So the traditional technical analysts, you read, you can read them. They're all over the place. They'll tell you, yes, nothing is safe yet, as if the market's ever safe. I don't know why people keep on saying that. The market is never safe. Therein lies the opportunity of making money. If the market was that safe, then nobody would make money. You know why? Because all the prices would be adjusted accordingly to what would be the actual intrinsic value. It's not there. There's always a mispricing of prices. That's why you can make money. And those mispricing of prices are the oversold levels and stuff that I show. That's where prices are completely mispriced. Last chart that I'm going to show on Apple, I was dead right on it. Where I would say 99.9% of people out there were dead wrong, including the big shot analysts. And you guys know that too, because I called it. Did I know it? No, I didn't. I just looked at my charts and I put my gut feeling in there, and I had some fundamental reasoning as to why Apple wouldn't go to 150. And what happened? It had the biggest rally since 2011, and Warren Buffett just bought 75 million shares or something that big that I don't even know the number. So let's stick to this SPX right now. I got to make this quick. 2681. See that red right there? That's your 50-day moving average. It ties in with everything that I've been showing on the other charts. We at least get to the 2681 because that's your 50-day moving average. If we fail at the 50-day moving average, fine. You just made yourself double your money. From here, if you bought and you overall held it, took some profits, but overall, you would have made 300% on your money, if not more. From here, from the late day buyers on Friday, you're looking at roughly 100% or so, or maybe a little bit less. Now, the 50-day moving average gets blown higher, you get major resistance at the 2700 level. This is not rocket science, I repeat. This is very easy to see what is going on. Now, these analysts, traditional analysts, say, oh, it's not safe and stuff. Well, what they consider safe is breaking out of this massive downtrend line and then taking out 2750. And then at that point, 2800 comes into play. So if you just want to make, the traditional guys want to make money just here, we like to make money all the way from here. Understood? That's the difference between clueless day trading and the rest of the trading services out there and the so-called traditional guru, technical analyst gurus. They're all smart people and stuff, but we pick on things far ahead of schedule, far ahead of the masses picking it up. Because by the time it breaks the 20-50-day moving average and hits there, most of the gains will be done. And we'll probably hit another massive roadblock, I wouldn't be surprised, where we sell off again hard. Remember that the 200-day moving average comes into play at this white line here that's at 2616 right now. It doesn't take much for the market to go up to 2700 and again test down to 2616, and by that time it's probably going to be at 2620. So I would rather be a tactical trader than be an emotional, oh, I'm going to wait for the perfect moment, because there are no perfect moments. And I repeat the perfect moments. There are perfect moments, actually. These are the perfect moments for traders to make substantial amounts of money. And from the short side, hitting these levels and shorting are the perfect moments. But shorting is a dangerous business because the market is very, very, very oversold on many metrics. So shorting has to be quick, mostly intraday, and you got to take your money and run. And these sell-offs that we get intraday, this type of stuff, can give you 3 to 400% on your SPY and SPX shorts. These ones can give you up to 500%. Big numbers, guys. Now, internally, this is looking good. This, I had said there was a positive divergence going on. And I've explained it so many times, explain it once more. We went lower from here to here, from here to here. Okay? But if you look at this, I even drew the line. We actually went higher. We made a higher low on the full stochastics while we made a lower low in prices. That's called a positive divergence. I even wrote it down here in one of my charts, a couple of my charts. Positive divergence play out in the form of massive 400 and then 300 plus. This was an 800-point reversal, guys, within 48 hours. You snooze, you lose. Even if you're awake, you should act. Problem is, people are wide awake, they're not even snoozing, and most of them are not doing anything, which is a-okay with us because we're in the business of making money. We're not in the business of sitting there watching other people make money. Okay. Okay, that's it for now, guys. Keep it straight to the point. Don't want to go overboard. See you guys tomorrow. Hopefully, for all of you and for all of us, it's going to be a fantastic week. Get ready for major volatility. I don't trust anything that's happening in the markets. I'm just going by the charts. I'm going with my deep understanding of what's happening on the financial front, on the political front, trying to relay that all to all my members and free trial subscribers. But if you don't act, you cannot make money. We are not overtly bullish. We are certainly not overtly bearish. We are with, I feel the market still has room to move higher. However, it's an extremely volatile market. I know it's difficult, and it's far more difficult, almost impossible for the retail emotional trader who is just simply watching prices. My charts are drawn to close to perfection, and I'm telling you exactly where the markets will go before they'll pull back and such. If they don't pull back, great. We'll, as technicians, we'll go ahead and show you the upper range, which we are already drawn on these charts. All you got to do is focus a little bit more. Have a great evening. God bless you all.